Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending November 17th, 2023. Hope everyone's having a good time getting ready for a happy Thanksgiving. So let's get into stocks. They were broadly higher last week with mid and small cap stocks again outperforming large caps. The benchmark S&P 500 was up 2.31%, while the Russell 2000 gained 5.49%, and the NASDAQ was up 2.42%. Now, overseas, the developed market rose 4.51%, while emerging markets gained almost 3%. Within the U.S., the best performing sectors were real estate and materials, while consumer staples and energy were the laggards. We've seen a balanced portfolio in the last month do about 6%, which is pretty good. So we got a lot of the gains back this year that we lost last year. So we're still not even, but really, really close. Let's talk about fixed income. Interest rates fell and bond values rose last week in response to lower than expected inflation data. The benchmark 10-year Treasury yield dropped 17 basis points to 4.44%. The negative spread between the 2-year and the 10-year Treasury yields has dropped to 44 basis points from 107 back in March 8th. Remember that, the bigger inversion, the bigger chance for a recession. So they're still saying, oh, maybe it's not going to happen now, right? So that's what it looks like. Everything looks pretty good. Let's talk about commodities. The price of oil has been declining for 4 consecutive weeks, with the price of West Texas crude falling 1.46% last week to $76.04 per barrel. The U.S. Energy Information Administration has been lowering its forecast for the next year's oil demand and now expects a $100,000 barrel per day surplus in 2024. So we'll see, that's why we'll be going down. Economic data, the leading indicator for consumer price inflation, the producer price index, fell 0.5% last month, swinging from the increase of 0.4% in September. This brought the year-over-year increase down 1.3% in October versus expectations for 1.9%. Now, after excluding volatile food and energy prices, core producer prices were flat on a month-over-month basis, also below forecast. But we always say they always correct this stuff. So they're coming out, we're like, oh, this is so great. Then they end up correcting it. It's like, I thought we were going down. The consumer price index, the CPI, was flat in October versus September, primarily due to a drop in the price of energy. The CPI rose 3.2% on a year-over-year basis last month, slightly below consensus expectations and a half point below September's rate. Now, after excluding the volatile food and energy, the core CPI rose 0.2% on a month-over-month basis and declined a tick to 4% on a year-over-year basis. So that's good. That's kind of what they want to see. That was our whole big concern. The Fed keeps raising interest rates because they want to see this number come down. Now, let's get into retail sales slipped 0.1% in October. They were better than consensus estimate of a 0.3% drop. So this compares to a 0.9% gain the previous month. Core retail and food services sales were, excluding the more volatile categories of motor vehicles and parts and gasoline, rose 0.1%. but continued to slow in October. The largest declines were for furniture and home furnishings, along with the miscellaneous retailers. So let's get into some company news. Financial stock holdings and Gradient Strategies portfolios last week did pretty well due to the widespread decline in interest rates. Bank of America, one of them in particular, and Morgan Stanley, owned in both the Core Select and the G50 holding. They rose 7.55% and 5.66% respectively. So you see that, you say, how come my portfolio, what's happening? You see the individual stocks going up and down every week, every month as you go. How about Target? Contrarian Choice and Core Select Holding reported quarterly results that were significantly beat expectations. Same-store sales declined 4.9% in line with their plan. Gains in profitability were attributed to tight inventory controls, higher percentage of sales in-store, and strong demand in beauty products. And management also raised guidance for the coming quarter, and shares were up 21.14% last week. You might remember this was in our G50 portfolio. They just took it out because there's been such a dog all year, but finally it came back, and it's still in a couple of our other portfolios. How about Walmart? Core Select Holding reported sales and earnings that were better than expectations, including same-store sales growth of 4.9%. However, management noted a softness going into the important holiday selling season. Shares went down 6.52 for the week. And they're actually talking, Walmart was saying, the consumer is actually stressed. They're starting to see that people coming into Walmart aren't spending as much. So everybody's not that optimistic. However, we're still seeing the market go up. We're seeing everybody's talking about a Santa Claus rally, that by the end of the year, because of all the spending going on, we should start to see the market go higher and higher. So everybody is still pretty optimistic. That's what they're saying. We'll see how that goes towards the end of the year. Again, we got most of our gains back for the year. We still are behind because remember, if we go down 20, we got to get 30 to be back to where we were. So that's it. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, give us a call at 855-756-5700. Visit us at aradvisorsinc.com. Have a happy, blessed Thanksgiving with your loved ones and families, and God bless you. We look forward to seeing you again next week.